Are you looking for good long-term growth opportunities here? Are you looking for a great investment, real estate, the opportunity for long-term income growth? Look no further, my friends, in Alexandria. Today I'm going to tell you a little bit about the company, the background. I'm going to talk about some of the strengths of what they're doing, as well as go over some of the exciting opportunities in the future that I think we're going to see eventuate with this company. Stay with me until the end. So what am I looking at? Well, this is one thing. They are a REIT, so obviously they rely on their tenants very, very much. Now, Alexandria has a portfolio here of many tenants. They are large tenants, they are public biotech, life sciences, multinational pharmaceuticals. These are tenants that are not going to go away. These are tenants that are not going to have financial difficulty or be in financial strife anytime soon. So that, I think, gives them a good sense of security. They've got very powerful same property net operating income growth. And as we can see here, quarter after quarter, they have been doing a very powerful growth trend here. And as they note here, third quarter 2022 was the third highest quarter in their company's history, which is very, very pleasing to see. Now, another thing that I do like seeing is this very strong and renewed focus on strategy. So here they've actually disposed of a whole load of non-campus standalone properties. So properties that they've had historically, focusing very much more on that idea of the campus. Now, I like that. I think it's showing a very good sense of concentration. I think the campus model for them is a much stronger way of going. Now, from a financial perspective here, we'll excuse the dividend yield here due to recent price declines. But here, if you look in the last 5 years, as they note, there's been a 6.5% average annual dividend per share growth. And I think that's really powerful and really important to see for us as investors. And now, turning to fast graphs, I like this tool because it gives me a nice visual summary of what's happened to the company and what is happening. And they've got some pretty nifty tools on top of that. So the first thing I like to look at here is this overall trend. And we can see here from about 2015, 2016, the price is sort of disconnected from the underlying earnings here. Now, I've got earnings calculated as the adjusted funds from operations, which is sort of like a reasonably good measure for the underlying distributable earnings for a REIT here. And that's the measure I like to use. So we can sort of see the prices sort of escalated even as earnings have, the AFFO have sort of gone up a little bit. And we can see here in dotted lighter shading areas that we expect some reasonably strong growth in the future. Now, dividend yield at the current prices, we've seen this very steep sell-off here in recent, over the last month, giving us a dividend yield of nearly 4%. Now, a couple of really important notes here. It is BBB plus rated, which I think is very powerful and important to see when we're thinking about the quality. Now, I'm going to switch over to the analyst scorecard. Now, this is where fast graphs, one of the features I really like, is they go back and they look at the historical analyst performance. So we've got here over 1 year forward estimates for AFFO. We've got the analysts get it right. They hit the actual outcomes on the 1 year estimates. And in the 2 year estimates, they also get it right. So this is a company which is historically, from this I would say, both provides good guidance to analysts, but they're also operating in a fairly predictable, manageable way. And as an investor, I like predictable. So let's have a look here at the forecasting calculator. So we're looking at AFFO here. We switch to the normal multiple, we can see that normally it's traded 28 times, which I think is very, very high, and I wouldn't touch it at those normal multiples. But here we're seeing it's trading at around an 18 times price to AFFO ratio. Now, I think it deserves a premium. I don't think it deserves quite as much as 28 times, but even say at, I'm going to say here, at about nearly 20 times premium, 20 times price to AFFO, if prices returned to this 20 times AFFO ratio, and the analysts have that estimate for AFFO correct, that would show us a total rate of return of about 32% till the end of 2024, or about 17%, double digits annually. Now, to me, in my mind, that represents a pretty poor outcome, and in fact, actually, I'd be much more inclined to think that something like this could happen because of the strength of the company, where by the end of 2024, prices increase to this normalized price to AFFO ratio of about 28 times. Giving us a total rate of return of nearly 90% or an annualized rate of return of about 40%. Now, a couple of really important points here as well. Looking at the analyst estimates here over the last 6 months, we can begin to see that these estimates haven't really gone and changed too much. So one of the things I do like about this is the fact that the estimates have been revised. They've been revised downwards a little bit for 2023, and they've been revised downwards a little bit for 2024. But, and this is a key thing, but not nearly as much as some of the other REITs I have looked at here. And that's really important to take into consideration. Now, it's really interesting to note as well as that Alexandria has been listed as an office REIT. And technically, yeah, okay, you can call it an office REIT. But as we see here as well, there's a couple of important points here. Number one, very, very, very long-term relationships here. So here, for example, with another big well-known company, Moderna, a partnership for the last decade. So that's beautiful. It's a good thing to see. Number two, we're talking about some beautiful spaces for workers to work in. And then number three, we're talking about life sciences. So is it an office or is it more of a scientific laboratory working space? And I think you'll find it's more of the latter. It's more about these science lab areas. It's more about having workers in mission critical spaces doing work that they cannot do at home. They do not have lab benches at home. They need to come into the office. And so I think Alexandria has a lot of advantages because of this. Now, another big reason I love the company, BBB plus S&P Global credit rating. So it's in the top percent of the ranking among the publicly traded US REITs. So it is uncommon to see the REITs with these beautiful credit ratings. And I think when you consider the market turmoil, I think this is a really powerful indicator of the quality here of the company. Now, a couple of last data-driven points that I want to have a quick look at. The current price to the net asset value estimates per share, we can see here it's at a very, very low level. So the price is actually substantially lower than the net asset values per share. Now, contrast that back here to previous years where it was trading at a premium. Here it's trading at not only a substantial discount where prices looks like they're substantially lower, 2/3 of the net asset value per share, but we can also see that this level hasn't really been reached. This is a 10-year chart here. It got down that level in 2016. It sort of got down to this level again in 2020. In the height of the pandemic, it got down to even below this level a little bit in 2022 in June. So I think this is a really, really nice time to buy. Now, we've seen AFFO grow rather well over time. Now, this is also from the ticker terminal, and we can see up till here about 2022, we've seen a slight decline here in the AFFO per share. But here we can see analyst estimates in 2023, 2024, 2025, 2026, and 2027 showing a very, very powerful increase here, adding on almost 50% AFFO growth over the next 5 years or so. So I think this, to me, is very, very encouraging, where analysts are expecting very, very powerful and continued AFFO growth going forward. One last final look at what analysts are expecting going into tip ranks. It gives us a couple of really interesting points. So it's looking at the current price of about here listed as $178 as a target here. This is the average of all the analyst targets, and they range from a low of 155, which still represents, a substantial potential upside from 120, all the way through to about 200, representing a very, very substantial increase here from about $120. Now, if we switch, one of the things I do like about tip ranks is it can automatically here calculate the top analysts and pull out these. So you see the stock forecast and price targets of the top analysts that are consistently outperforming the market. If we switch to this, we're going to get fewer than 8 ratings. We're going to get 2 ratings, and those are for 198 and 177. So these are analysts that consistently perform well. If we follow these analysts' estimates here, we're talking about some substantial upside potential here at the current prices. Okay, so I've given you some thoughts here. I think this is a strong, solid REIT. I like their tenants, I like their focus, I like the future opportunities here. And now, most of all, also, I really enjoyed watching those price declines, and I have just entered a position. I've just started my position in here. It's a position I've wanted to build for a long time. So what do you think? Hit me up in the comments down below. Is this currently a holding of yours in your portfolio, or is it one that you've got your eye on and you're thinking about adding? What are your thoughts? Punch that subscribe button, hit me up with the comments and let me know. I'll see you soon.